Hello, fellow real estate investors. I am Daniel Sperling Horowitz with OfferMarket, and welcome to the June 2024 DSCR loan update. So, today's update and this month's update, we're going to be talking about interest rates, we're going to be talking about the housing market, and we're going to be talking about insurance and the alarming rise in insurance premiums. So, let's jump right into it. Today's DSCR loan interest rate is 7.55%, and you arrive at that number by adding the 5-year US Treasury, which currently stands at 4.3%. That's the risk-free rate. You add that to the credit spread, which is 3.25% on average currently, and that's the risk premium, which is based on the specific borrower and property profile for your specific DSCR loan. In a lot of cases at OfferMarket, we are closing loans below the DSCR loan interest rate index, which again is at 7.55%, and our lowest quote today is 7.125%. Okay, going further into interest rates, the 5-year US Treasury is down 0.34% since the end of May. There's a few reasons that we should discuss for why that's happening. The Canadian and European central banks have begun their rate cutting programs. So the market has become excited and they're setting expectations now here in the US that there might be hope for at least one rate cut later in the year. Unemployment is ticking up slightly based on the most recent jobs report. It's a very small increase from 3.9% to 4%. Although the labor market remains very strong. And that's just one of the factors that's causing rates to trade at an elevated level right now with a lot of volatility and uncertainty. The final item here, talking about the contributing factors to the current rate environment, the consumer price index came in at 3.3%, which was 0.1% below expectations. And one of the major contributors to inflation right now is housing prices, and that's up 5.4% year over year. So rents remain strong, home prices remain strong, and that's ultimately driving higher inflation. There's hope right now that inflation will continue heading lower towards the Federal Reserve benchmark of 2%, although I think the majority of participants in the market are expecting that to be a very long journey, and 2% might not be realistic in the current climate. Moving into credit spreads. So we talked about historically low credit spreads in last month's update, and we continue to see competitive bids from the institutional investors that buy our DSCR loans. So we're very cautiously optimistic that credit spreads will continue to be low, and therefore your DSCR loan pricing will be very competitive because there's a strong appetite for fixed income right now, and DSCR loans are attractive for institutional credit investors compared to other types of fixed income securities or investment opportunities. Now, switching gears here, the next thing we want to talk about is the housing market. There's been an alarming spike in on-market delistings. So properties that were listed on the MLS have been delisted. As of last month, 9% of all active listings were delisted. Now, if we read between the lines, that might tell us that sellers have unrealistic expectations. Buyers can't really afford the present home price levels. So there's a bit of a frozen market, a standoff between buyers and sellers. So that could signal that additional inventory will come back onto the market at lower prices. We'll need to wait and see what it ultimately means for real estate investors. The next interesting data point is that according to Redfin's institutional investor report, this most recent quarter saw the first uptick in investor home purchases since 2022. Now, there was a very significant fall from the peak in 2021, 2022, but we are starting to see more investor activity, which could signal that there's a shift to a buyer's market, and it could signal that institutional Wall Street investors that are amassing rental property portfolios are starting to feel more comfortable becoming more active in the market once again. Now, there's going to be some alarming data that we're going to talk about now about existing home sales. Existing home sales are down 22% when you compare it to the 2019 pre-pandemic levels. And if we zoom out on a time scale, and I'll include this here, we're sitting at lows that we haven't seen since 2008 to 2011 in terms of home sale activity. And these same levels we last touched in 1978, and then a few different points from 1978 to 1996. So we are certainly in a very abnormally slow home selling cycle right now, and it's for obvious reasons from the pandemic boom, with people locked into low rates and home prices that are certainly inflated and elevated. Based on our market data, we think that as much as 50% of residential investment properties are purchased through sourcing off market. And that means that you're sourcing through wholesalers, referrals, or direct marketing, which many investors have some form of activity to go and source their own deals. And for this reason, what we're seeing with our most successful clients right now is these off-market transactions are often priced at levels that are 10 to 20% on price below what the equivalent property in the equivalent condition would be selling for on market. So off market is extremely important right now, although we are cautiously optimistic that we will see more and more attractive investment property opportunities on the MLS as well. So if you want off-market deal flow, you can go to OfferMarket.us and subscribe to investment properties that are posted by wholesalers, tired landlords, and distressed sellers. Just wanted to touch upon a couple of more points here. Landlord insurance is a hot topic right now. Premiums are up 20+% year over year. What we're seeing in our lending division is a lot of insurance policies that are essentially overquoted. Coverages are more than is necessary based on lender guidelines, and probably more than is necessary in general. We're seeing replacement cost value calculators overinflating how much it would cost to replace a property if it were a total loss. So we've launched our OfferMarket insurance rate shopping platform, where our team quality controls investment property insurance quotes, generally landlord insurance quotes, but also fix and flip insurance quotes, just to make sure that you're not overpaying. And in many cases, you're able to save several $100s a year on your insurance premium, and that contributes to higher DSCR, higher cash flow. In many cases, it allows you to qualify for a higher loan to value and even lower interest rates. So head on over to OfferMarket/insurance if you want a competitive landlord or fix and flip insurance rate quote. Now, the final thing that I wanted to speak about here, and thanks so much for watching today's video, is our fix and rent program continues to resonate with our clients. Our core focus are rental property investors that focus on 1 to 4 unit residential properties. And we understand that you're going to come across properties that are in distressed condition and aren't rent ready. So we will provide you with a bundle, which is a fix and flip loan on the front end to purchase and renovate the property, and then a DSCR refi on the back end with extreme savings on lender fees and no or low seasoning. So you can be in and out of that fix and flip hard money loan in under 90 days or 90 days, depending on the scenario specifically. So check out our fix and rent program. If you normally buy properties in cash and you're tying up all that cash, you can use our fix and rent loan program to do possibly a couple more deals without tying up all that cash into one or two deals. So as always, you can get your instant loan quotes from OfferMarket and your instant pre-approval. And if you like this video, please, we would love for you to like it, subscribe to our channel, Add any feedback or comments in the comments section, and we hope you have a great day, and we look forward to assisting you on your real estate investing journey. Thanks so much.